Are the AI consumer winners now becoming more clear? And in part, do we have that clarity because of what happened yesterday?
Remember, we're only 18 months into the game on the field, right? And we were all shocked, and I think Deidre just laid it out nicely, when ChatGPT hit the screen in December of 22. And so I think this is a natural step in the evolution, right? Clearly, Apple, with 1 billion users, is going to play a significant role in introducing AI to the masses. And part of the reason, that we like Apple is only 5% of Apple users today can access Apple Intelligence. So they're going to have to upgrade these devices in order to play. But let's be very clear. Google's still in the game. OpenAI directly through ChatGPT is still in the game. Meta very much in the game. And then there are other players. But in the consumer game, don't count out Elon, right? X.AI is going to have a ton of capital. They've got an incredible team, and they're going to come at the consumer space hard.
Well, he didn't seem all that happy about what happened yesterday. We'll get to that, though, in a moment. I mean, you were at WWDC.
I was.
You saw Sam Altman.
I did.
There. The power of this partnership, I think we can characterize it as, between Apple and OpenAI. I mean, that to many was a sort of game-changing moment in the evolution of this company's AI ambitions.
Well, I mean, you're bringing together the leading brand really in AI. ChatGPT grabbed that verb, right? That first mover advantage, 170 million users of the product. I said at the time that I couldn't believe Google allowed them to become the verb of AI. And so them going first and partnering with Apple, which is clearly the premium brand in consumer, in consumer mobile devices, in laptop devices, et cetera, that was a natural coming together. I thought it was very interesting yesterday, right? While they did say the door is still open to Google, and I expect Google is going to be there, noticeably absent was everybody but OpenAI. The leadership team of OpenAI was all there. I suspect that the integration going on with OpenAI is deeper than what we heard about yesterday, right? So I don't know that this is going to be everybody playing equal. There may be a first among equals here, Scott.
I think the other, key piece of information, I alluded to it at the very top of the program, teased it as such, a new position that you have. And in fact, it is Apple. Yeah. Right? You haven't owned the stock, and I don't know when, but you added it recently, correct?
Yeah, so we added it earlier this quarter, and it was really on this thesis that, we thought Apple had run up to the high end of its range. So pre-AI, it wasn't clear how they were going to maintain this position of dominance. But as it became more clear to us that they could really be this broker, right? They could be this layer that sits on top and provide a privacy layer, provide an interaction layer to the things that we interact with. And the stock had come off a lot. We added to the position. What we saw yesterday was, frankly, what we expected, right? And so, I think, we also own Google. We also own Meta.
You also own Microsoft.
Right.
You also own Nvidia.
So I think that don't get carried away that we have a big bet that they're going to be the winner. But we do have a bet that they are going to be one of the players in the hunt.
No, but you've been selective at times.
For sure.
In not owning all of those names just because they all are players on the field. This, though, is a statement of sorts that you saw enough or thought enough about what you were going to see that you're willing to buy the stock.
Well, I would say there maybe is a different statement going on in our portfolio. There are points in time where we have everything bet on one company because we think their advantage is so asymmetric that it's going to lead to really outsized returns. Right now, I think it's pretty balanced, right? I think all of these leading players as a pack will outperform a lot of the rest of technology. A lot of technology, frankly, is under assault by the changes that are going on in the world. There's a lot more question about the viability of the growth path for those companies. But I think Apple is among the group, including Tesla, including Nvidia, including Google, including Meta, including Amazon, that will on net benefit from this because I think scale advantages in data, scale advantages in capital really matter in the age of AI.
Okay, so Nvidia is unbelievable stock, okay? You see what we see, right? You're out here in the sort of epicenter of all of it. But what do you make of this unfettered run that this stock has been on? Yes, it's had some moments of pullback. It was at 900. It went to 750, and then it went off to the races again.
Right.
Is this too much?
Well, I think when you have to ask the question, is AI real? right? If you believe this is really the super cycle that I believe that it is, you know, the consensus estimate for next year for Nvidia, I think, is around $3.50 per share.
You're way ahead of that.
You know, we're closer to $5 a share. We've been ahead of the consensus estimate since the fall of 22. And what I say to my team, if the numbers are going up, the stock is going up, because the rest of consensus will have to raise their numbers.
You're
now,
like 40% above the street.
Again, there are numbers on the buy side that are as high as $5 a share. So if you go to $5 and you place a 30 times earnings multiple on that, right, you get to $150 a share. We're not that high. I don't think you need to be that high to own the market leader in AI. But I will tell you this, you know, part of our team was in Taipei last week. And you listen to what Jensen is doing. We see the orders for GB200. We see the orders for the B200. Nothing is slowing down, Scott, because they have to place orders 5 years in advance for these products. They have to go find power. They have to find data centers in order to build these supercomputers. And so everybody has been climbing this wall of worry. Remember, I was on when the stock went to 250, and everybody said sell. And then the stock went to 400, and everybody said sell. Why? Because it went up. They weren't doing the work on what was also going up, which was revenue and earnings.
Josh Brown, I think everybody who watches our program, at least at this point, knows your affection for this name, which you've owned for a long period of time. But what about this optimism that Brad is sharing with us? And when you ask the question, is it too much? Is it too far, too fast? The suggestion here, no.
Look, I continue to feel that the biggest risk to the market is all of a sudden somebody pulls back and decides they're going to get off the carousel of just endlessly building and buying. But it hasn't happened yet. And until it does, the problem with Nvidia, it never makes it easy, because it's not expensive enough to say, okay, that's it, I've had enough. To Brad's point, the fundamentals have been outpacing the share price growth miraculously for the last few years. And at some point that may change. At some point we may just see a runaway train that is no longer justified by what the forward earnings are going to be. But we are not at that juncture yet. So it's a really tough name for a lot of people, because it's not egregious. It's not Cisco in 1999. And quite frankly, one of the underappreciated parts of the Nvidia story, and maybe Brad wants to weigh in on this, people think it's just chip sales. And then like, okay, I hope they buy more chips. Once you put these chips in, you are now spending money with Nvidia as a customer for the foreseeable future. You've made a huge investment, and now you're involved with their software, with their environment, with their services. In a way, it is very similar to Apple, but from a B2B perspective. All of this build-out with using Nvidia chips requires ongoing spending as far as the eye can see with Nvidia, and that's an underappreciated element of this. This is not just selling chips.
100%. I mean, this is the substrate of AI, right? And so it's the primitive. You have to have compute and you have to have data. And so, again, I think everybody's got to, we all know. We've come a long way fast, Scott. I'm not telling people at home to shove it all on the table and go all in today. Our net exposures are 60%. What does that mean again? Reminder for folks at home. That means I have 6 out of $10 at risk long the market in our hedge fund. I'm not all in. I'm not 100% net long, right? And at the start of 23, remember, when the rest of the world thought the market was going to crash, we were all in. Right? So I think you have to pay attention to prices. You have to assess risk reward. But there is no doubt in my mind that Nvidia should be at the top of your list of technology allocations.